I've heard terrible stories about people losing a deal, and it was only saved because of hard money.
Let's talk about that.
Today on the Investor Tribe podcast, I'm Hampton Skurlock.
And I'm Milton Ali, and we want to welcome you to the Investor Tribe podcast.
Late night grind, got the cash in the flow. Flipping these dreams, what's the portfolio grow? Brick by brick, stacking wealth in the zone. Investor Tribe, obs, where the hustle is home.
We want to give a big shout out to the good folks and our friends at Surepoint Equity. This is super exciting, but we're going to get to that later.
We're talking with the first name in hard money in Louisville, Kentucky. Let's welcome Jordan Pohn to the podcast with Surepoint Equity. So how are you doing, Jordan?
I'm doing great. Milton, thank you. Hampton, thank you. Good to be back here and chatting with you guys for the afternoon. So thank you.
It is absolutely amazing because this is special for us. We have started our podcast, and very few people know this. We started our podcast at Surepoint Equity's office. And we started, and it was an idea that, Drew and Hampton and myself, we were just kind of dreaming about it. And you were gracious enough to let us kind of bum on your couch, so to speak, and just kind of hang out with you. So it feels like it comes full circle because we used to see you all the time. And now we kind of got our new studio set up, our new place. So we welcome you to our new studio setup as well. So we're just super excited to have you here, and we're going to go ahead and jump right in.
Let's do it.
Yeah. And, tell us who you are, how'd you get started with the hard money, lending business? What is hard money? How can it help investors? We want to hear it all from you.
I'm going to go a little bit further back or just back to hard money?
You can go a little further back. That's fine. You can take it back, way back. I know Milton likes to say that.
Way back?
Take us back you'd like to go.
So I'll take you back and come through quickly. By trade, I'm an attorney. Started that back in 1995. Wasn't for me. Jumped out of that in 1998. And my brother had started a mortgage brokerage shop doing 30, 15-year owner-occupied loans. We had 5 people, grew that up over 16 years, and then we sold that in 2011 to Lending Tree. And then we were looking for something to do that was in our wheelhouse, and we know loans and houses. And so hard money, a couple guys came to me and said, will you fund some of our deals for us? I said, I'll give it a try. So I was just lending out of my pocket, 2 or 3 loans a month. And then I saw that there was a need for a lender who knew what they were doing, could be efficient, and people wanted an alternative to a bank that took a long time and a big down payment. So I brought my brother in and my other partner from the old company, Lee, and we started this in 2016. Now it's 2025, and we've helped Hampton before and many others in the community, and we've probably done close to 3,000 loans, and we do it everywhere from to Indianapolis, Nashville, Cincy, around Louisville.
Okay, so about a 3-hour or so radius from Louisville?
About 3 hours, yeah.
So if you need hard money and you're in, 3 hours or so range of Louisville, give Jordan a call or look him up, surepointequity.com.
Yep.
So, yeah.
And so let's kind of take people to that they may be watching this podcast for the first time, catching us, knowing we have history, and they're thinking, okay, what is hard money? Help us out.
So when you do an investment property deal, and these two are the experts at it, but I've learned what they need, because both of these guys are investors here, they need more than just a bank. When you go to a bank, it is not efficient, it is not streamlined, you want a big down payment, it takes forever, and you can lose the deal real quickly. So if you're going to be an investor in real estate, actually anywhere, but here in Louisville as well, you should have a bank, conforming lender, but you should also have a couple of hard money lenders too. The advantages to hard money are much, much lower down payment, close in 7 to 10 days, and once you're approved, they're not going to have to keep approving every single time. You don't have to give more paperwork every single time. Once you're approved, you're approved. They'll get an appraisal and title on that particular house you bring in next. But we have people who do 20, 30 deals a year. We close them up in 7 to 10 days. They don't have to give us any more paperwork. We might do a soft credit pull once a year, make sure they're not running up their credit card debt. But once you're approved, at least with us, you're approved. So it's very quick, very simple. You hand us the contract and your scope of work, tell us what you want to close. 10 days later, our money and documents are at the closing table. So hard money is a little bit more expensive, but it's so much quicker. It's going to be really hard to get a deal if you don't have your own cash, or you have to put down 20% and hope that a seller is going to wait 45 days to close. In the investment world, again, these guys are the experts on the properties. Nobody wants to wait 45 days. There's too many people who have their own cash or have hard money who can close in 7. And Milton is a realtor as well. You know this. If you're the seller's realtor, you don't want to wait 45 days for that closing.
That's
and
right.
you might even take a couple grand less on that property to lock it up in 7 to 10 days. For the investor, it's great because they get a lower price. And then for you as the realtor, it's great because you know it's done and over and time is money. So hard money is a great tool if you don't need it, but if you need to pull it out of your back pocket and buy something, and I shouldn't say this, but I will, because you guys know Patrick Mattingly. Patrick brought me along.
He's a member of the tribe.
Sorry, member of the tribe, good
he's
guy.
A member of the tribe, yeah.
He brought a deal to me. He caught me at Thursday at Korea at 8 o'clock at night. He said, Pohn, I need you to close a loan by noon tomorrow. So that's 3 business hours. I go, Patrick, that's impossible, but I'm going to get it done for you. And he had a very nice fee, his biggest fee by more than double. And we closed it in 3 hours. I can't do that every time. He'd already run title. The quality of this is a very high quality investor.
You want Drew
With
to
a
put
job
all the
and good
disclaimers
credit.
down.
Yes, good job, good credit. Title was run. It was at Harry Borders, who we all know. So everything lined up. But if I can help a guy make 40 grand on a deal, I'm going to get it done. Now, my partners were mad at me. Harry wasn't particularly happy with me. But that community is all going to help each other.
Right.
And we got it done.
And he was ecstatic. It was a good property. I knew the buyer, walked through it with him. He seemed like a solid guy and had some experience, had probably decent credit and a good job. And there was good margins on that house for him. So it sounds like his lender he had lined up, I don't know if it was a bank or who it was, everything fell through the night before or like right before closing. And the wholesaler or, the other investor helped him put in touch with you and get the deal done quickly.
I would be careful. We have some very good hard money lenders here in Louisville. And most of the guys here that these 3 or 4 work with use them. Almost none of the experienced guys use national hard money lenders. There's a reason for it. I advise against that. They're bigger. It's too easy to say no. They have their very stringent guidelines. They can't close a loan in 3 hours. The others that Milton and I and Hampton know, they can get more creative. They're right here in town. They can go see the house. I'm closing a loan in a couple of days for a guy who just got turned down at the last minute. Solid guy, they decided not to do it. And he almost lost the deal. Use somebody local. And there's plenty here that Hampton and Milton know about too. 3 or 4 really good people here.
You're 100% right. And it's so important to be able to have good resources. I started off, one of my second, deals with some national lender. I don't think I was a member of CREA yet. I don't think I was a member of CREA. And I started off and I had a national guy. It was a house that I had door knocked and I found, and I worked with him for almost 3 years. Literally just working with them. And it was like my second deal. I found a national lender. They were terrible. I don't remember their name. I had to block it out. They were just that bad. It was a horrific experience. And then I think you started telling me about who was around that were local, and that was a big help because, when you are in a local community, so you do want to find hard money people that is at the very least regional to you. They don't have to be down the street from you, but as long as they're regional and they have an understanding of your market, they can help. Because I know you do deals in Tennessee. I know you do deals in Indiana. I know you do deals in Ohio. And so you're more of a regional kind of operator in that kind of sense. And you've done deals all over the United States as well. So, so you have that type of experience. And so some people might think, closing in like 3 business hours or closing in 7 days might be a scam, or it may be too good to be true.
Yeah, it's certainly not a scam at all. I can vouch for these guys, and they've done deals for me, and we'll get back to that in a second. We wanted to give a shout out to Bespoke Marketing. So running a small business is hard. Running a podcast is hard. You should have to be an editor, an actor, a brand strategist, and our friends at Bespoke Marketing can help you look good while you're doing the things you're great at. So visit them at bespokemarketing.org. Bespoke Marketing connections tailor-made. So I want to tell about some of my experience with a national lender. And Milton told his horror story. I had a deal I was going to sell, and someone brought a national lender to me, and they had a pre-approval letter. And I'm thinking, okay, I haven't really dealt with this lender before, but they got a pre-approval letter. That should be good enough. We're going to close in 7 to 10 days. Shouldn't be an issue. And then they wanted to extend the closing. And then another, it was a week, and then want to extend a few more days. Like, what's going on? And, what's going on here? Then they couldn't get the funding. And so I was like, that kind of left a bad taste in my mouth with this other, it was a national lender. I don't want to name names. And sure enough, it was less than a year later, their name came back. It was a pre-approval letter. And I said, guys, I don't want to close you guys. You can use any other lender. They're like, what do you mean other lender? I go, literally any other lender in the world. I said, just had a bad experience. They, well, that's who we're pre-approved with. That's who. I was like, well, if you can close within 7 days, we'll use them. But there's no extensions. There's not any addendums. I'm telling you, you should use another lender.
Good faith deposit.
Actually, Milton, you and I are working on one that it didn't work out. Right now, we're working on one that didn't work out
with the national. Yes,
the national, and Milton and I are closing that, I think, early next week, right?
Yeah, hopefully, yeah.
Yeah. So it happens all the time. On the way over here, a guy had a 7-house package, clear to close for Thursday. So in 2 days, lender just yanked it out of him.
Oh gosh.
So I got it driving over here. Hopefully we can close it. But you've heard the horror stories now. These guys are very sophisticated investors. Be careful with national.
Yeah. I mean, so it's just really interesting. So when you're talking about hard money, I want to kind of get into some of the differences between traditional bank lending and hard money lending. And so many times it seems like the traditional bank is underwriting both the person and the deal. And hard money underwrites more so the deal and the person. And there is a difference. Can you get into that?
There is a difference. So with the banks, you're going to have very stringent guidelines. You need a certain credit score. You need a big 20% down payment. You're going to need certain assets. And if you don't fit in the box, you're not going to qualify. And then it also takes you 45 days to 30 to 45 days to close the loan.
Right.
And they will look at you individually as an individual. And then they're going to look at the house and get an appraisal. And like Milton said, they'll look at you, make sure you qualify. Look at the house, make sure it qualifies. Hard money does the same, but like Milton said, we lean a little bit more toward the collateral, which is the house. We're also going to look at the same things they look at: income, assets, credit, and your experience. So for Hampton or Milton, if they brought a deal that they buy for 100 and it's a huge 125 reno, they're approved for that, no problem. But we're more subjective. If a new person comes to Surepoint who's just watched HGTV and thinks every deal you make $50,000 on,
and they always get it done within a half hour, with commercial breaks and everything,
right, make 50 grand in a half hour. If that person comes to us, we're going to say, let's hold on that, because you can lose a lot of money on one of those big renovations. Even experienced people like these guys, it's hard to estimate a $125K reno. 25 to 50K, cosmetic, that's one that Milton brought to me. Newer guy, flooring, cabinets, bathroom. Anybody can handle that. And of course, Milton, as Investor Tribe, is going to oversee it, so that gives me great confidence too. So we look at the same things at the bank, but in a different way. Debt ratio, you got to hit 45%. That's income, debt divided by your income. We don't have a debt ratio. We know people like us are self-employed. We all write out things legally, but our top line's great and our bottom line is always terrible. So I know guys who live in $500,000 houses and their income shows me $18 they made last year. I know that's not true. We look past that, as other hard money lenders do. The banks have their guidelines. They take the $18 divided by your income, and it's never going to work. So we look at it differently. Credit, we don't have a minimum credit score. We look at it all together. Experience is subjective. If you want something big, you're going to need more experience. If you're looking for something cosmetic, anybody can handle that. So that's not a problem. So there's no hard and fast rules with us like the bank. They require a bigger down payment. They require 45 days. And we're much easier to work with. We qualified your guy in about 8 minutes, didn't we, Milton, the other day? You came in.
It took 2 weeks to get the paperwork in because he's not technically savvy and all that kind of stuff.
He was approved too quick. He wasn't ready to be approved that fast.
Right? He wasn't ready. So once we literally got all the paperwork in, it was super fast. And so that's the key, right? Is just being able to get everything to you and get everything in. While we're kind of talking about that.
Can I give you a compliment real quick? I see all kind of investors out there. Milton's client was not very computer savvy. Milton didn't wait around. Milton said, I'm going to grab him and we're coming to your office with the paperwork. It got approved in 8 minutes and that deal is closing. Milton doesn't wait for things to happen. He makes things happen. That's why I love working with guys like Milton and Hampton. He didn't say, oh man, I can't get over there. Milton grabbed his client and brought him to me, and now it's closing, and that 10% that these guys do more makes them better than everybody else. I see it all the time. There's a million reasons why something doesn't get approved. Milton said, I'm going to put him in front of you.
Yes, thank you. And I did not pay him. Actually, I did kind of pay him just to say those cool things about me. But no, thank you so much. What's really cool is that if you can give us a really quick answer about, on a monthly basis, if you think back over the last, I would say, year, how many deals are you saving? Right? If you really think over the last year and on a monthly basis, you're thinking, how many deals do you save from the brink?
Well, and I'm going to kind of interject here because, you save a lot of deals, you make deals happen. But when you first started talking, then I was thinking saving newer investors from getting into bad deals. Because I've heard people say,
there's that too.
You've saved, you saved me from
people
getting into $125,000 renovation for their first deal. And you said, no, it's just too much. It's going to be a lot harder than you think. It's going to take longer. It's going to cost more. You're going to have contractor problems. You don't do this big, ugly house for your first one. Go with a smaller, prettier one, or one that's not going to take so long. Ease into it. Dip your toes in the water. So yeah, but I would like to hear about how many deals you save to actually get to the closing table. But then I'd also like to hear about the deals you save people from themselves, and where it's not a deal, you save them from something that's not a deal.
So I'll say this, not everyone's created equal. So if you come to me and if Milton brings me a client and they've got $100,000 in the bank and they can put down 20% and Milton's got 45 days to close, I'm going to tell them, I'll do the loan, but you can go to the bank. You have your 20%, right? I'm always going to give the best advice to the investor. If that's Milton or one of his guys, I need people to believe in me, that I'm not always looking to put every dollar in my pocket. So I could easily have said, yep, I'll take it. But I said to, her name was Jennifer, I said, you should take this to the bank. Same time, if you bring me a risky loan, I can mitigate my risk by requiring a larger down payment. But that doesn't mitigate Milton's client's risk. So if we have a 10% down payment, I can say put down 20%. That makes my loan lower. So I'm safe, but the investor's not safe. I turn down probably 2 or 3 deals a month where I say, you don't want to do this one. I'll make my money, but you're going to lose money. And I'm hopeful that if they trust me, with my reputation, if I'm always going to give you the best advice for you, not every dollar in my pocket, that ultimately long-term, and I'm old, long-term I'll make more money that way. As you guys know, not everybody, you two do. Others in this industry, you got to be very careful of who you trust. You just do. They've been in it for a long time. Their reputations are solid. They're not going to do stuff but there's new players in the game who want to make every dollar in every deal.
Oh, yeah. I definitely appreciate
You've seen that.
Oh, yeah, of course. And managing real estate can be complicated. And getting one thing off of your plate, and contact our friends at Liberty Mutual. They have great and incredible rates. You can click the link that's in the description, or you can call them at 1-800-266-0644. You can hit the code Milton Ali KY 444-689. That is Milton Ali KY 444-689 for your free quote today.
And there's there's something beneficial also to be said for having a pre-approval, from a hard money lender or a private money lender, that now, hey, I can go shopping, I can find a deal. Or if I've got something where it's time sensitive and the house it's up for foreclosure sale, in 2 weeks, I don't have to deal with a banker. I can go and I can get a great deal on this property because I can get the money to get it done because I've been pre-approved. So how much does it cost to get pre-approved? What's the process? What are some of the benefits? How easy is it to get pre-approved with a private lender?
It's very easy, and Hampton's right. Get your pre-approval, because once you have, it's really not with us a pre-approval. If you're approved, meaning if Milton's approved, which he is, and he's heads out of here today and finds a house that he wants to purchase. Little old lady, grass is this tall, mailbox is stuffed. Milton can go offer on that property. He knows what it's worth, and he can sign the contract right there. He doesn't have to call me now. He's experienced. He can just send me that contract, and our money's behind him. So I would say get pre-approved just in case you need it. You can pull it right out of your back pocket. Milton knows he can call me. I'll send him a pre-approval, proof of funds. It comes right to his phone. He can show the homeowner or the other realtor, I'm approved. And Milton knows our money's behind him. So I think first step, we can work it if you don't do it that way. But once you get approved with us, it's an approval. We'll still do title and an appraisal just to check everything, but our money will fund the deal. We have never not funded a deal that we've approved unless the investor wants to back out, and then we'll help them do that. But we don't back out. We might change some terms around to be creative about it, but once you're approved, you're approved. And I think that's the first step on that. And we just need W-2, an asset statement, and we're going to soft pull credit report. We approved Milton's guy in literally less than 10 minutes, I think.
Yeah.
It doesn't take us long.
If you had any horror stories or learning experiences, for investors out there, a deal, gone bad, either you came into it, later, or you had an investor that had contractor issues or went over budget, or it was a lot more than they thought of. What went wrong? And what was the final outcome? I don't hate to bring up, anything bad, but it's good we want investors to know it's not always roses and rainbows and unicorns. It's sometimes not always that pretty.
It is definitely not. Now, we're proud to say in 9 years, we've never had a new investor. We've had experienced investors lose money before. Nobody knew, because we're doing the due diligence in the background, and we've been doing it for 20 years. Not one new investor has ever lost money.
Nice.
Because we'll help you through the deal, and you're not going to see everything. Now, these two guys, they can take more risk. They're older. They have more money, more assets. So my experienced guys will take a risk. I'll tell them if I don't see it, but I'm not going to tell Hampton and Milton I'm not doing the loan. And then they're big boys. If they lose money, they lose money. We've only had 2 or 3 of those, to be honest. But we had a guy lose $50,000. He's a multimillionaire. He took out $1 million loan. I said, man, your payment's $8,000 a month. And then I put it in an email because that's a lot of money. And he lost $50,000. Yeah. Now on the next deal, he swings big. He made $250,000. So that made up for the 50.
Yeah. Of course. What's really interesting is, so our first podcast, when we were in your office, and, we would hear you on the phone, and you probably would hear us, trying to figure out how to do a podcast. The really interesting thing is one of the first conversations we had about having our podcast, and you can go go to our podcast at, on YouTube or Facebook or Instagram or X, and look for the podcast, I Lost $80,000 So You Don't Have to. And that was one of the very first podcasts we shot, was about some of the losses. And it's really interesting how sometimes you're having conversations with people And if someone goes in your office, you have the whiteboard and you're kind of helping people navigate the math through the whiteboard and being able to talk them through the math, because that's the most important dynamic. When we first started sitting down, when you taught one of the classes at Flip Savvy, you were walking people through the math. Like, okay, look, this is what, an ARV is. This is what after repair value is. This is where you need to be in order to qualify with us. Understanding things fundamentally. And I think that's what sets you guys apart. We often consider Surepoint, and I don't know, I think you had told me this. Surepoint is like the first name in hard money when it comes to Louisville.
Thank you, Bill.
It was like the first name why? Because here's the reason why. Like, you would go to other hard money people and then they would say, are you approved for Surepoint? No. Okay, then I won't do business with you. And that's the way it was for years. And people would have to go to Surepoint. And that's how I, heard about you guys in the beginning, was that you guys had to pre-approve people before you can go with anybody else. And so, and I think that's because you guys were the standard. It was like, there's other hard money people out there, but they all were like, have you did a deal with Surepoint yet? And so I really thought that was super cool to be able to be that first name.
Well, I think they were respected and you were efficient. You had a background in the lending business. Not all of the other private money lenders did. They may have been investors that morphed or got a little older and then they got into lending, which happens sometimes. But you were a lender that went from lending, residential loans to lending on the, investment side and then private money loans.
And all we do is lend. Quick story.
Yeah, go for it.
So I wanted to go see how the sheriff's sale worked, the foreclosure sale downtown. So Frank Miller, who everybody knows here, I said, hey, I'll go down with you. Let me see how this works. And I'm sitting there and I'm thinking, if Frank is bidding on a property, because I was thinking maybe we flip some, right? I'll be an investor and we'd lend some. Because that's what all the other hard money lenders do. They are investors, like you said, and they also lend money. And I'm like, if Frank bid 100 and then I raise my hand at 105 and he'd turn me and say, hey, Pohn, I'm going to give you the loan. Stop bidding up my price. I went right back to the office and I told my two other partners, my brother is one of them, and said, we don't buy residential real estate in Louisville. And I think we're the only ones that don't. We don't compete with our clients. I have residential stuff way outside in the gorge, and I have some commercial strip malls, but we don't compete with our clients. So if I get a deal, let's say Hampton calls me and says, hey, I got something, can you get rid of it? I call my clients to give my investor that deal. I don't take those deals. It does, I think, makes us different than everybody else.
You mentioned your brother there. I heard he's a good-looking guy. We don't see him much anymore, but you're twins, right?
We are twins, but
right.
He's like Bigfoot. You might get a sighting, but you're not sure if it's me or him. Yeah, he moved home for COVID and never came back to the office. So that's when Milton and Hampton became my suite mates, and we hung out together.
Yeah, I mean, no, the brother's super cool, and I work with him as a real estate agent, and so that is super cool. This episode is brought to you by our good friends at Surepoint Equity. They lend hard money, helping real estate investors move fast and fund smarter. With fast approvals, competitive rates, and decades of experience, Surepoint is the go-to partner for real estate. Visit surepointequity.com to learn more and get funded fast.
With the free pre-approvals if you need them. So
yeah, yes. Of course, man. Yeah. And so, what's really cool is that, if you guys are, funding deals and helping people, I think you answered this question. You're not competing with us, which can't be said about everybody, right? It's really good that you're serving the investor community in this way, that you're looking out. What do you think are some of the best practices for some of these newer investors that want to get in the game? What are some best practices?
Well, this might surprise you. People like these two who started the Investor Tribe get a good mentor. I can vouch for these two. There are others around town that I know that are fairly good, but I know these two guys, and their podcast was next to me for many months. So I've worked with Hampton for probably 9 or 10 years now, and Milton for 3 or 4. So a good mentor will keep you. It's not the ones you make a little money on. It's the 50K loss that's really going to hurt you. So these guys here, I would say get a good mentor. Again, there are others around town. I know these two guys well, so I can recommend them. Get a good mentor so you won't lose that 50 grand, because one or two little things that they'll catch that you won't catch is going to make that deal go bad. I've seen it time and time again. Now, hopefully your hard money lender is also doing a lot of due diligence behind it. We do. We don't just order an appraisal. We've been looking at appraisals for 25 years. So I'm looking at the grid pages, which you guys know what that means.
Oh, yeah.
I'm looking at your title. I'm an attorney as well. So I'm going to make sure there's no liens on there. So a good hard money lender is the second protection behind your investor tribe people here. And then 3, don't go too big at the beginning. It can be tempting because a lot of the time, the larger the renovations, others don't want to deal with it, so there are bigger margins. But that means there's bigger room for trouble too. And if you run into a structural issue or a foundation issue, 25, 30 grand, Hampton, Milton.
It can be.
Yeah,
So
it can be, yeah.
Real quick sometimes.
And I just went out to a house because this was a newer person. It was a very unique property. I drove out 30 minutes. He had told me he looked at the house. He had not looked at the house, in my opinion. The wall was bowed about a foot. And he was trying to get $500,000 ARV, which Milton mentioned. And I said, that's going to cost you 40 grand to fix. Well, his profit was 50. And it was a unique property in LaGrange, Kentucky, which is a little more rural. And as the realtor can tell you, those take 9 to 12 months sometimes to sell. Very unique property. It was a barn dominium in the middle of LaGrange.
Oh, wow. Okay, yeah.
Yeah. So on that big of a loan, his payment was $3,000 a month. When that starts clipping away, $3,000, $6,000, and Milton's having a hard time selling it, not because he's not a great realtor, it's a one-of-a-kind property. If it takes 12 months, that's $36,000 you're paying to me. And the 40 grand wall that was bowed, that was a $50,000 loss, and I stopped them from doing that. So don't bite off one you can chew.
Good.
Get a great mentor. Get a hard money lender who has your back, not just his back. But after that, real estate is not easy, as we all know.
Right.
But if you grind, like, I'm going to go back to Milton. Milton put that guy in front of me. We had to close quick. The other lender backed out. 95% of my people would just have called his client and said, go see Jordan. Milton literally met me at my office. And he didn't have time to do it because you had to go quick.
Yeah.
But he made sure I was put in front of that client, and we got him approved right then and there. And it's closing next, I think, Monday or Tuesday. That deal happened because of Milton, nobody else. It was easy for me once you brought him in front of me.
Yeah.
Proved him in less than 8 to 10
minutes.
minutes.
I mean, great client. But if Milton didn't bring him, I don't know how good of a client he is. So I think those 3 things: don't bite off more than you can chew, find a great mentor, and find a good hard money lender. Those 3 can take you 90% of the way there. And the rest is on you.
Yeah. I mean, what's so cool is we want to thank you so much for putting up with us in our early months of being a podcast. And we want to thank you for joining us in our new studio. And we want to invite all of our podcast listeners, all of the tribe members, to go to surepointequity.com, reach out to them, ask Jordan questions, give them a call, give them a shout, run some ideas by them. We have worked with them and working with them actively. We highly recommend them. And again, they are one of the first names in hard money in Louisville. So we do recommend them. Come on by. And we want to thank you for joining us today and for spending some time with us. And we're just grateful.
Yeah, I'm very grateful too. I didn't get to use my prompt, so we wanted to go back and
That's right.
we're both former soccer players. You know, I hate to say past our prime now, but we're retired, and I've got some flags in the corner of the room with the yellow flag and the red flag, and something Drew wanted us to ask was what are some before we kind of close up shop here, what are some red flags you look for? Like, what would you just say, well, that's a deal breaker, or you got to be real careful if somebody comes to you with, low budget for repairs or high ARV? What are some red flags you see?
So I'll give a couple different areas. So one is actually the area that you are. If you're in certain zip codes in Louisville, it's going to be harder to sell the house. They're going to be older houses. We know the zip codes we're talking about.
Oh, yeah.
So location, geography, if you're in the middle of nowhere, rural, that's a harder house to sell. Your buyer pool is going to be smaller. So just geographic location of the house is very important. Age of the house. Far more things go wrong with a 100-year-old house than a 50-year-old house. 100-year-old house is going to have brick foundations and the mortar starts going down. That's a $50K loss, and we had one of those that we caught before it happened. So I would say geographic location, age of the house, anything structural. I would say foundation, big problems. Everything else, we're working on one now that we're going to close. It's a $175,000 renovation, which seems big, right?
Yeah.
But you know where it is. It's over in Crescent Hill, a great area, 4-bed, 3-bath, probably worth $600,000. It's a new person, so you're thinking, oh my God, why would you give them $190K? It's just a full cosmetic. In a $600,000 house, your kitchen doesn't cost $20,000. It's going to cost $75,000. Right. But it's still just a kitchen. The flooring's not going to cost you $20,000. It's going to cost you $80,000. Bathrooms aren't going to cost $10,000. They're going to be $30,000. But it's still a cosmetic renovation. These people are actually real estate agents over at Lenahan. And they said, would you do it? I'm like, I know 180 is a big reno, but not for a 4,000 square foot house. So you have to have a hard money lender who can see, even though the number is big, it was just all cosmetic stuff. You could have moved into the house today, beautiful house, but it's worth $400,000. To make it worth $600,000, you got to put in a lot of money to it. And they're doing their first flip right now.
Wow, that is super cool.
Super cool.
Yeah, super cool. We love it. We love it. And again, we are so thankful for you to come out and finally spend some time with us. It's kind of crazy, Hampton. He never joined us when we were. He was always busy doing loans and pre-approving people. He never joined us, right? Never joined us while we were in the building, but now we're glad to have you out. And you've been a member of our tribe, so it's been super cool. And join us on all of our socials. You can reach us on Facebook. We have a Facebook group you can join. You can join us on YouTube, Instagram, X, and Spotify. And I'm Milton Ali.
And I'm Hampton Scurlock.
And we'll catch you on the flip side of the Investor Tribe.
The Investor Tribe podcast is brought to you by the Investor Tribe, all rights reserved, featuring Hampton Scurlock and Milton Ali, executive producer Drew Cookenmaster, produced and distributed by Bespoke Marketing.